The investment landscape is constantly evolving, and with the emergence of blockchain technology, a new asset class has emerged: decentralized applications, DApps. These applications operate on decentralized networks, like Ethereum or Solana, removing the need for central intermediaries and offering users greater control over their data and assets. DApps cater to various use cases, including finance, DeFi, gaming, non-fungible tokens, NFTs, and marketplaces. The potential of DApps is vast, prompting increasing interest from investors seeking exposure to this nascent, high-growth market. However, directly investing in individual DApps can be challenging due to factors like volatility, technical complexity, and regulatory uncertainty. Enter DAPP ETFs, innovative investment vehicles that provide diversified exposure to a basket of DApp-related assets. By bundling together tokens associated with promising DApps across different sectors, DAPP ETFs offer investors a convenient and potentially less risky way to participate in the DApp revolution. The case for DAPP ETFs as growth proxies. 1. Accessing a high-growth market. The DApp market is still in its early stages, but holds immense potential for growth. According to DApp Radar, the total value locked, TVL, in DApps surpassed $200 billion in 2023, showcasing significant user adoption and capital inflow. By investing in a DApp ETF, investors gain exposure to this burgeoning market without needing to pick individual winners. 2. Diversification and risk mitigation. Directly investing in individual DApps can be risky due to their inherent volatility and the potential for technical glitches or rug pulls, fraudulent schemes. DAPP ETFs spread risk by holding a diversified basket of assets, mitigating the impact of any single DApp's performance on the overall investment. 3. Convenience and ease of use. Investing in individual DApps often requires navigating complex blockchain protocols and cryptocurrency exchanges. DAPP ETFs trade on traditional stock exchanges like any other security, making them readily accessible to a wider range of investors, including those unfamiliar with blockchain technology. 4. Professional management and expertise. DAPP ETFs are typically managed by experienced investment professionals who actively research and select the underlying assets based on their long-term growth potential. This expertise can be invaluable for investors who may lack the time or resources to conduct their own thorough due diligence. 5. Potential for liquidity and transparency. DAPP ETFs traded on established exchanges offer greater liquidity compared to individual DApps, particularly those with limited trading volume. Additionally, reputable ETF providers ensure transparency by disclosing the underlying assets and their respective weights within the fund. Challenges and considerations. While DAPP ETFs offer compelling advantages, investors should be aware of certain challenges and considerations before investing. 1. Regulatory uncertainty. The regulatory landscape surrounding DApps and cryptocurrencies is still evolving, and uncertainty could lead to price volatility or potential restrictions on trading DAPP ETFs. 2. Underlying asset volatility. The DApp market is inherently volatile, and individual DApps within a DApp ETF can experience significant price swings. Investors should be prepared for fluctuations in the ETF's value. 3. Fees and expenses. Like any other ETF, DAPP ETFs incur management fees and other expenses, which can eat into returns. Investors should compare fees across different DAPP ETFs before making a decision. 4. Limited track record. DAPP ETFs are relatively new investment vehicles, and their long-term performance track record is limited. Investors should carefully evaluate the underlying assets and the methodology used for selecting them before investing. Choosing the right DApp ETF. With several DAPP ETFs now available, selecting the right one requires careful consideration. Some key factors to consider include: 1. Investment focus. DAPP ETFs can focus on specific sectors within the DApp market, such as DeFi, gaming, or NFTs. Investors should choose an ETF aligned with their preferred risk profile and investment thesis. 2. Underlying asset selection. The methodology used to select the underlying assets within the ETF is crucial. Look for ETFs that employ rigorous research and due diligence processes to identify promising DApps with long-term growth potential. 3. Fees and expenses. Compare fees and expense ratios across different DAPP ETFs to ensure you are getting the best value for your money. For track record and reputation. While track records may be limited, consider the provider's overall experience and reputation in the ETF industry. Conclusion: DAPP ETFs offer a compelling way for investors to gain exposure to the high-growth potential of the DApp market without directly investing in individual tokens. However, careful consideration of the challenges and considerations is essential before making an investment decision. By choosing a well-managed DApp ETF aligned with their investment goals and risk tolerance, investors can participate in the DApp revolution and potentially capture the growth opportunities it presents.